What's up? What's up? Happy Monday. Monday fun day. How you guys doing today? I hope everyone is off to a very productive week. Hey, my name is Jeremiah Davis, aka the Funding Coach. Coming to you live with Business Funding Now, Monday Fun Day. Whew, the topic today is reporting trade lines and new business credit lines. Now, some of you may know, I've talked to you, some of you, and you do know that trade line in business credit arena, business credit vendors and credit cards, trade lines, things of that nature, um, the pandemic had an effect on how those businesses, those creditors that extend those lines of credit, um, do business, and primarily because so many of us in this niche market of business credit and business funding have been utilizing the same, you know, vendors to establish business credit. Those vendors are not stupid. They understand what people are doing, right? And they're making a little bit of money on it. But at the end of the day, they are not in business to give another business a line of credit or net term, say net 30, 60, 90, 120, or revolving line of credit just for reporting purposes. Okay. So that the days of, getting a line and then using it one time and then getting them to report to your business credit profile, or I would say over. All right. And quite frankly, it is not the best practice overall, right? Not you what you want to do is get them and grow them by utilizing them. And I'm going to tell you why. I'm going to tell you that because you're building to something else. These are for lack of a better term, stepping stones, but they're valuable stepping stones that you can continue to utilize um, ongoing. Okay, and those are the things I want to kind of educate you on, right? So now, post pandemic, a lot of vendors will not report to the business credit bureaus unless one of my lights did something funny. Maybe I twisted it or something. I don't know. Anyway, um, they will not report to the business credit bureaus or business credit monitoring agencies out there unless you make three consecutive purchases and payments, right? And the best practice is to make those purchases and payments. Um, Jeffrey, nice for you to join us. Make those purchases and payments um, 10 days before they're due. And for the initial reporting, you need to at least spend $75 to $100 per month on each of those trade lines. In our software, right, for my direct clients, I recommend they get five or net 30 accounts and five credit cards, right? In our software, we have a list of hundreds of vendors and revolving lines of business credit cards that you can apply for. We have them already selected in categories for industry type. We also have them, we show you what the qualification requirements are for each of those trade lines and those revolving lines of credit, as well as what the underwriting guidelines, the approval criteria, and what bureaus they report to, what business credit bureaus they report to. So you can pre-select those in advance and then plan to spend roughly $1,000 a month for the next 3 months, right? Like I said, if you do $100 and you got 10 of the net cards and you have 10 of the revolving cards. And yes, nonprofits can become bankable. Yes, and build business credit. All right. The trick is having a lender that works for nonprofits. That's the hard part, right? Obviously, the more a nonprofit is financially fit and secure, got their financials in order for the last 2 to 3 years, makes them more attractive. And I do have lenders that work for nonprofits. Okay, got a question? Want to answer it? All right. So on those revolving, on those, so you got the 10, right? You got the five for your net accounts, and you got 5 cash card business cards, right? These are cash cards, revolving lines of credit um, that you can utilize in your business net, right? We have that category in the software. So, with that being said, you make those 3 months consecutive purchases and payments, all right, right, and the net 30 ones or the net ones you can buy the products and services you need to fulfill those products and services to your customers, right? A lot of industries have will give you a net account or a revolving account, right? Initially, they might start with a net account, and then as you use them, they'll gradually convert you into a revolving account. But here's the key: to qualify for corporate only financing, you need 10 to 15 reporting trade lines in good standing. And one of those trade lines needs to have at least a $5,000 limit. Okay. That's one criteria of corporate only financing, right? That's what everybody wants. Everybody wants corporate only financing. Nobody knows how to get it or where to go get it. Okay. Because you go to the bank that does corporate business loans and you apply and they say no, right? Well, we know the criteria, the approval criteria. We're showing you exactly what they're looking for, and we update our data every 6 months. So it's the most accurate underwriting guidelines for creditors and lenders and vendors, all of it, right? Okay. We also have a treasure trove in the software of 3,000 plus business credit vendors. Now, I can't promise you all those vendors will report, but you can ask them. There is no laws governing them if they have to report or not. When you apply, you want to ask, what agencies do you report to? If they don't report to any, but if you need it, this is another tip. If you need the trade lines, the other benefit of using these cards, right? These net 30 or net term cards or your revolving cards is um, they go towards building comparable credit. Another criteria for corporate only financing, right? Um, One of the criterias in the corporate only financing is establishing comparable credit equal to the amount that you're trying to borrow. So if you go to one of these lenders, you apply for corporate funding, and then you want just keep it simple, $100,000 and corporate only finance. Corporate only financing, by the way, is no personal guarantee, right? It's the corporation getting the loan, and so there is no so there's a list of criteria. I'm not going to go over it, but I did several videos on this before. But when I'm talking about what these trade lines do in preparing you for corporate only financing, okay? So um, when you go to a lender and you're applying for a corporate loan, say only $100,000, they're going to pull your business credit and they're going to see if you have access to $100,000 in comparable credit. Yes. Just to clarify, when you say corporate, are you referring to Inc. or LLC? It's primarily for Inc. But if you filed the 2553 tax form to be taxed as a corporation, when you initially set up your LLC, you can get in that way as well. Jeff, you're trying to trip me up, bro. I know this stuff. Anyway, so if you do not have the comparable credit that you're applying for for the loan, you will get denied. Because what they're looking at is other financial institutions haven't trusted you with that type of access to that type of money. Okay, so back to the trade line. So the more you utilize those trade lines, you do a couple of things. One, you show your credit worthiness with those creditors, right? So they will give you increases. The more responsible you are, the more increases you will get. So it wouldn't take you very long, right, to get less than a year, maybe 6 months, to get from a net, say 30 or 90 or 120 type term to a revolving term with a 5, 6, 700, or $1,000 limit, right? Now, collectively, your trade lines, your credit cards, your vendor accounts, your credit cards, and bank business lines of credit will collectively go towards building comparable credit. Okay, so you're building your comparable credit at the same time right, with these cards. The other thing you're doing is also increasing your bank rating score. Your bank rating score needs to be a minimum of a low 5, right? Bank rating scores start in the 3s, then the 4s, then the 5s, and up. Okay, if you're above 5, you're good. You're good. Okay, but the 3s means your daily average balance in your business checking account is between $100 and $999. All right, if you're in the 4s, that means your daily average balance of your business checking account is between $1,000 and $9,999. The low 5, right? It goes low, mid to high. The low 5, your daily average balance in your business checking account is $10,000 and up to $100,000. So if you're in the high 5s, that means your rate around in the $90,000 range is your daily average balance. So now the daily average balance or your bank rating is calculated over 90 days. So your daily average balance for the last 90 days needs to be a minimum of $10,000 to qualify for corporate financing. Yes. So another reason of decline. So by using these trade lines, reporting these trade lines, you are increasing your comparable credit. By more you use them, the more limits they give you, right? And then, like I said, in 6 months you could have one of them, which is one of the qualifications, with a $5,000 limit. Okay. You're also stop using your operating capital, all right, because you're buying it on credit and you're paying that off later, whether it's a net 30 or revolving. As long as you pay it 10 days before it's due, it's going to report on time. And business credit is calculated by trade lines, limits of those trade lines, and your payment history. That's all that's calculated on, right? So who else uses this type of formula to approve business loans? Anybody? Anybody? The SBA, the United States government. Okay, everybody's worried about DNB. They're worried about you know, Equifax business, Experian business, Credit Safe. Those are the most popular generalized reporting agencies that creditors and lenders report to, right? I'm not going to talk about all the other business credit reporting agencies that are more niche market specific. A lot of those are trying to get in the mainstream as well. But the point being is, whatever the United States government uses, that's what banks are going to use. Banks are not pulling your DNB, all right? They might report to it. They're not pulling your Equifax or Experian business. Other creditors may pull it, all right? But banks and the United States government are looking at your small business FICO. That's what they're looking at. And the SBA is looking at your small business FICO. Your small business FICO is your or SBSS score is your business credit score, needing to be about a 80 or higher, 70, 80, 100. I mean, some of them go, but the SBSS score, the range it goes up to, I think, to 300, but they're looking for a minimum of like 160, 175. It changes. So it used to be like 150. Now it's like 155, 160. All right. But it's also a combination of your business credit score and your personal credit score, right? So they're taking your personal credit score. It needs to be a minimum of 650, but preferably 680 or higher, right? To qualify for some SBA loans, 650 for some SBA loans, like an SBA Express, things like that. But the more money you want, the higher the criteria is, right? The lender, the bank that provides SBA loan, has to approve you under their guidelines, right? And then they send it also to the SBA, and the SBA approves it under their guidelines, right? Then you can provide the collateral, because the higher the limit, right? I think you can go probably around. I mean, it depends on the lender, kind of, but generally, if it's over, say, $50,000 or $100,000, the higher, or I know some that might go up to 350, right, on SBA Express, 350,000, without collateral or minimal collateral. Some of them require a 10 20% down payment. Oh, so you need 10 20% of the amount that you're asking for. Okay, you got to have some skin in the game. It's what they're looking for. If you're going to want this money, then you got to make a commitment as well. Okay, so they want some skin in the game, and then the SBA is going to guarantee 50% of the loan amount, right? So when the SBA guarantees 50%, the bank is guaranteeing the other 50%, or actually it's more like 30% because you're coming in with 10 to 20%. Okay, so if you want a $500,000 SBA loan, you're looking at $100,000 probably, and as seed money, as well as then the SBA guaranteeing 50% of that 200,000, and then the lender, guaranteeing the other portion of it. So they want to make sure if you go sideways, that whatever collateral you have, they're going to seize to recoup the loan amount. So those are the things. But the point to this is what I'm saying is get the trade lines you need for your business. Do not get trade lines you do not need for your business, right? If you don't need them, you're not going to use them, and none of this is going to do you any good, right? If you get that, if you get one and it does report after one purchase, that's fine. But after a while, if you don't use it, it becomes a moot point. It might stay on your business credit report, but it's not going to give it any gravity. All right, it's not going to do what you want it to do. What you want it to do, you want to use these things on a regular basis. Increase your limits. Stop using your operating capital. Increase your bank rating score. Increase your fundability, your bankability. The more lines of credit you have, and the more you utilize them, the more banks want to give you. Okay, banks want to give you money, but they're not taking any risk. Okay, you need to mitigate the risk, and that's what all this is about, right? So when you come to Business Funding Now, and you do our success scan, we're going to pre-qualify you for one of our 21 business loan options, right? Most likely it's going to be revenue based or asset based. It's going to be a little higher interest, all right? But if you then enroll into our Become Bankable coaching, right, which is a year coaching, but we're going to want you bankable in 4 to 6 months. Then we're going to go around for a second round of funding of one of those premium loan products, right? The corporate-only financing, SBA, or business lines of credit or business term loans with low interest, low monthly payments, and longer terms, right? The best possible options you can provide or get, and then get better quality money, less expensive money. Most likely, if you haven't paid off that first round of funding, you can use some of that money to pay that off. Now you have some cushion and some breathing room. All right. You should also have these lines of credit. We have a way to show you how to access secure lines of credit and then unsecured lines of credit, even as a startup. Okay. So, and it's perfectly legit. Perfectly legit. We're not doing anything. We're not doing anything fraudulent. But speaking of fraud, this is a murky area. I know a lot of people out there promote, shelf corps, in corporate trade lines and things like that. Here's the problem with that. All right, you get a shelf corp, more power to you. I'm not passing judgment on anyone. All right, you have to create the financial blueprint for that shelf corp. If the shelf corp has no financial documentation that's legitimate, using it to secure additional funding that's not personally guaranteed, right? If you're getting startup business funding or business term loans that you're personally guaranteeing, right, then that's based off your personal credit and your income, okay, that you can use for your business. Okay, there are lenders out there. I have worked with some that will do startup business funding, but that's what it is. It's personal loans in the business name that you PG, right? What I'm trying to get you to is stop doing that, okay? But if it's not legitimate and you do obtain it, then you're obtaining finances and credit under false pretenses and that's a federal crime. All right, adding quote unquote um, corporate trade lines to a business credit profile that are not real could be come back and bite you. So I'm not suggesting that you um, do. I would advise you not to do it, but you're grown. You make your own choice. All right. I'm just saying. If you come to my company and try to get funding, um, and we find it out, we're not gonna work with that because I can't have the FTC coming knocking on my door because of what you do. So I'm just giving you advice. All right. Well, I'm not even advice. I'm just giving you my educated information based on years of experience. So I'm not an accountant. I'm not a lawyer. I'm not a banker. I'm just a loan broker. Okay. And I know a couple things. That's all. I'm just a regular guy. We learned a couple things, trying to share information that I've learned. All right. So um, I hope that was helpful. I hope you guys find some value in that. Like as usual, I'd like you to like, follow, share, and listen. If you want to see if you pre-qualify for any of the loan products that I offer, go to the website businessfundingnow.com. Click on get the free business funding and success scan, and then you'll get access to the software that will tell you which loans you pre-qualify for, right? You can submit the loan application. This is all free, all right? No cost to you at all. I will get the loan for you, and you can go off to the races. I will try to encourage you to become part of our bankable coaching, and then once you complete the become bankable coaching, I will get you another round of funding. Now, if you want to build your business credit, you can do it in one of two ways. I can do the do-it-yourself model with the virtual coaching, it's $997, or the become bankable live coaching is $39.97, and we have financing and payment plans. Okay, so uh, just get this free scan. You'll even get access to the first 7 steps of lender compliance. You get those. You can complete those within the software for free. Yeah, get the free scan. And it also gives you an assessment of the areas of your business credit that need to be addressed. If the software cannot find or verify that certain things that are public record of your business in your business filing, then those things will be indicated with a red X and that you can address. Now you get access to the first 7 of those in lender compliance, but if you want access to the rest of them, you have to become a paying client. So at least take advantage of the free stuff, you know. All right. All right. My name is Jeremiah Davis. I'm the funding coach. Thanks.